5 years ago, most people thought that retail real estate was headed in a very wrong direction, with the belief that e-commerce would completely take over brick and mortar sales. But fast forward to 2026, and retail has become one of the strongest performing property types in all of commercial real estate, with certain parts of the retail sector completely defying expectations. So in this video, we'll walk through what's been driving the comeback in retail over the last few years and why some of the biggest private equity firms in the industry are doubling down on this sector right now. So the first thing I want to highlight, which honestly has been pretty surprising to a lot of people, is that shopping malls appear to be making a comeback. According to the Altus Group, as many single asset mall sales occurred in the first 3 quarters of 2025 as in all of 2024, and even though the final year-end numbers aren't out yet, this puts 2025 on pace to see over 50 single asset mall transactions. And today, with just over 1,000 mall properties remaining in the US, this would represent about 5% of the existing mall stock being acquired by new ownership in 2025. These types of trading numbers would represent the 3rd most active year in mall transaction history, only behind 2004 and 2022, which each saw 5.8% of the existing mall stock trading hands in those years. And while many of these malls are very likely going to be repositioned, a lot of malls are performing very well right now, with Simon Property Group, which is the nation's largest mall landlord, reporting occupancy levels of over 96% across their portfolio in Q3 of 2025. And while Simon's occupancy levels are impressive, according to the Altus Group, mall occupancy across the board in the US came in at 91% in Q3 of 2025, which was the highest occupancy rate we've seen for this asset class since Q4 of 2019. The general retail availability rate across all types of retail properties also came in extremely strong in Q3 at 5.3% according to Newmark, which is 1.2% below the long-term average in this sector, with markets including Raleigh, North Carolina, Knoxville, Tennessee, and Albany, New York all seeing less than 3% availability rates in the 3rd quarter last year. Now, even though mall performance has been the most positive surprise in the retail sector over the last few years, grocery-anchored shopping centers are also seeing a ton of demand right now, especially from institutional capital. In December of 2025, Bain Capital and 11 North partners raised $1.6 billion for a joint venture targeting value-add grocery-anchored retail properties, and when including the additional funding from Bain Capital Real Estate Fund 3, over $2 billion was raised to be deployed into this space. And this partnership has already been making huge investments in retail, acquiring a $395 million portfolio in August of 2025, which included 10 grocery-anchored retail centers in infill locations across the state of Florida and Charleston, South Carolina. And in June of last year, the partnership also paid $212 million for 3 retail properties in the Oklahoma City metro, which were anchored by Whole Foods and Trader Joe's. Other big name firms are also going after this part of the industry, with Blackstone making a $2.3 billion bid for Alexander & Baldwin, which is the largest owner of grocery-anchored shopping centers in Hawaii. Blackstone also paid $4 billion in February for Retail Opportunity Investments Corp., which is another open-air retail REIT, and Nuveen Real Estate raised $320 million to target grocery-anchored shopping center acquisitions. Now, the next thing worth mentioning about the retail sector is that supply isn't keeping up with demand and hasn't kept up with demand for a very long time. According to JLL, 13 million square feet of retail space was demolished in the US in the first 9 months of 2025, with the bulk of this figure being obsolete mall teardowns. And with less than 14 million square feet of retail product being delivered in the first 3 quarters of 2025, according to CBRE, the supply of available shopping center space in the US is barely growing at all. And this lack of new supply is very good news for retail property owners as a whole, but specifically for regional mall owners, this is causing huge increases in rents, with in-place rents across the country at regional malls today coming in at 7.5% less than current market rents. And this means that when these in-place leases expire, mall owners should be able to raise rents substantially, especially with 30% of leases at regional malls expected to expire over the next 3 years. According to RCA's November CPPI report, retail values have also grown across the country with 2.4% year-over-year value growth in November of 2025 and 15.8% retail value growth over the last 5 years. Q3 investment sales volume for retail product also came in at 43% above Q3 2024 sales volume, and cap rates for retail deals also fell to just over 6.8% in Q3 of last year, down almost 30 basis points from the fourth quarter of 2023. Now, the next thing that appears to be very positive news for retail investors right now is that despite all the headlines about weak consumer sentiment, consumers in the US still appear to be spending money. The University of Michigan's Consumer Sentiment Index came in at 52.9 in December of 2025, which was one of the lowest levels we've seen on record for this figure. However, despite consumers saying they feel pessimistic about the economy, consumers actually spent significantly more in 2025 than they did in 2024, when consumer sentiment was almost 50% higher, with year-over-year consumer spending rising by 4.2% in Q3 of 2025. The National Retail Federation also expected 2025 holiday sales to exceed $1 trillion, and despite fears about inflation and tariffs, the US consumer is very likely to continue these spending patterns in 2026. So with all of those things said and everything going on in the retail sector today, there are a few things that I would take away from this heading into the new year. The first is that if you're trying to break into commercial real estate in 2026, retail could be a great place to focus if you want to improve your odds of landing a job. Retail tends to be a much less popular asset class than multifamily or industrial, which means that you'll typically be up against a much smaller pool of candidates for these roles. And with major institutions raising billions of dollars to buy malls and retail shopping centers right now, we might also see a big uptick in transaction-related job openings, so acquisitions analyst or capital markets analyst titles in this part of the industry. The skills you'll learn while working on retail deals are also very transferable to other sectors of this industry, so even if you decide you want to work on a different type of real estate in the future, retail experience can give you a lot of different exit opportunities when you're ready to move on. And while we obviously don't know what will happen with inflation or the economy over the next 12 months, strong consumer spending this holiday season, despite some of the lowest levels of consumer optimism we've seen in decades, is a really positive sign for retail investors. And if you want to learn more about the retail underwriting and valuation process that commercial real estate investors use and how to build out entire retail acquisition and development models from scratch in Excel, make sure to check out our all-in-one membership training platform, Breaking the CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Breaking the CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more deep dive content on specific sectors of the real estate industry, make sure to hit the like button to let me know, and let me know in the comments what other product types you'd like to see covered in more detail in a future video. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.